yes, but crash, I don't think so. At least in India, because we are not buying US markets and all. So in India, from 10,500 going to 9,000 even or 9,500 is quite possible. But I don't see that kind of spike, that kind of situation. Even the global, I mean, if there is a rout in US markets, and I think it is going to have impact here also. Maybe we'll have a bigger rout than what happens in US. But if you look at the, say, if the thing is linked to the yield, Europe is still struggling at 1%. German 10-year is still below 1%. Japan is still at 0.1, 0.2. So I think there's a lot of slack, but people are scared. The past, this kind of expansion, 9, 10 years expansion, and we just got the tax cut from 35 to 20%. The earnings are yet to come. People are yet to be soaked into the enhanced earnings in next 3-4 quarters. So I think there are a lot of good news still in the system. There is a earnings explosion in US. The yield part is, I mean, I hope it doesn't go beyond 3, 3.25, 3.5. Because there's enough slack in Europe and Japan. So
I'm also expecting him to say something about emerging markets, specifically, like give a specific comment.
Why?
Essentially because, the noise is getting louder. I'll take a quote from Goldman Sachs' recent report where they're calling emerging markets rich countries. Emerging markets are looking like rich countries, and they are in profile, drawing parallels between developed markets and emerging markets. So at a time like this, one would expect that if all the big investors in the world are looking at emerging markets, Ray Dalio has taken an exposure to emerging markets, EM ETFs particularly, you would expect him to say something specifically about EMs, right? He should bring in investments within this region.
Yeah, but he has not been a great fan of emerging markets. I mean, he has come here.
But things are changing,
He has
sir.
the guys, I mean, his deputy, Ajit Jain, is from India.
Yeah, true.
He knows enough about India.
Yeah.
Clearly, he's not enamored by, opportunities of investing in India. So, I don't think, and his one basic faith is the laws of capitalism. And that is very well developed only in the developed countries. That's why they are developed countries. Here, at a drop of hat, you keep changing the laws. Someday you say capital gains tax is there, someday dividend tax. I mean, every single bureaucrat redefines his tax laws every 3, 4, 5 years. So that's what doesn't suit him at least. He wants something where there is a stability of every aspect of it.
But if you're looking at value, clearly developed markets is very little scope. Europe maybe, but he's bought into 2 Israeli companies. One, Iskar, which was a full acquisition, and now Teva, minority purchase. Why can't he look at India? Why can't he look at, China also, he made some purchase in the past.
I'm sure they must be looking to invest in India, but where is the sizable opportunity? He's sitting on 135. Look at his size. 135 billion. By the year end, it will be 160, 170 billion dollars. So the minimum deal size you must suggest is not $100 billion. You must suggest him a few $1 billion to invest in a high quality company at a reasonable price. Yeah. So he's not going to buy a high quality company at any price.
For example, now Teva is, his bet on generic pharma. And India has got so many opportunities within generic pharma. Even what Biocon is doing, it's turning a page, right, in terms of exploring the biosimilars market. I think there's great opportunity in Indian pharma.
So he can buy, after his holding all the airline companies for such a long period, he can buy all 5 of them. So I won't be surprised if he buys all the companies in India itself.
So he should keep his expertise where his expertise is pretty much embedded. But what about the fact that he's challenging his own old philosophies, right? Buy and hold, classic philosophy. He's lived by it. And now he's kind of saying, okay, maybe that's not the most prudent strategy in this market environment. In fact, I read an opinion editorial about this person who sold out Berkshire Hathaway shares because he says buy and hold in today's market environment is dead.
Yeah, so I don't think fundamentally he's going to change the buy and hold per se, but buy and hold forever, that he is revisiting. Some stocks, he's saying that the stocks which are not kind of a strategic this thing, he's not owning 100%. If he's owning 100%, it's almost forever. But if he has a minority stakes, clearly it is open to sell, and we are seeing more often that he's willing to sell. And I think he has made some changes in last year that the policy books, the guidelines of holding, there he has made changes that don't consider that if you bought something, we are not willing to sell. So to that extent, yes, he has given in, but I don't think that means a lot of change. Maybe not forever, but 10, 20, 30 years, definitely he will do it.
Ashish, ETFs versus mutual funds? You know, that
I
will
just
always...
want to add something,
Okay, yeah, please.
my 2 bits on the whole buy and hold thing. How I understand it is that when somebody says buy and hold, because you know, a lot of your viewers are our investors, so I would like just for them to clarify that every investment we make is a hypothesis, right? And companies declare their sales numbers every month and the results every quarter, and you know, so every hypothesis you make with actual market data is getting retested pretty frequently. So buy and hold actually doesn't mean that you are buying and forgetting. There's a lot of work which goes into buy and hold, and you're reevaluating your decision. I can stretch it to other extent and say that we are reevaluating our decision every month and every quarter. But if it is moving along the path which we originally hypothesized, then what is the reason to sell actually? So buy and hold is also contextual, and there is a lot more detail which goes into actually the buy and hold thought process. And yeah, I mean, on your point on ETFs, and I mean, my takeaway last year, because there was a lot of debate because he mentioned that, you know, you should look at passive. I still feel that what he was saying, he said that if it was my wife, you know, I would tell her to put into passives. I think what he's trying to say is that very difficult to find a great manager. One is it's not everybody's cup of tea to become an investor themselves. And second is that great managers are few and far between. So if you're not a Warren Buffett, and he said that Warren Buffett is blessed because he has Charlie Munger, who kind of influenced him. So if you can't find a partner like Charlie Munger, and if you can't be Warren Buffett, then you're better off putting it in the index
fund.
So what he's saying is that, you know, look, if you have a process and a philosophy and discipline and patience, then you're fine. But if you can't find such a manager, then you go to ETF, which I don't think anybody disputes. I mean, we all agree that you need a great manager to manage
No, but
your
he's
money.
talking about that 10-year bet where he won. He's like 10 years
That
and
is
index
against the
funds
hedge
will...
fund. Index fund winning against the hedge fund, because hedge people,
They buy
take
and
a lot
sell
of
a lot.
fees. No, one is that. Second is they take a lot of fee.
Yeah.
So the on downside they
Cruise to
don't
20.
they don't punish themselves, but on upside they take 220.
Yeah.
So you know, so it has not worked well. So he put that bet. It was more of a kind of conviction than anything.
But I
Even
urged
if
him last year, sir,
Yeah.
to invest in an Indian mutual fund, and he said, no ways, I'm not doing that in the US, I'm not doing that in India.
Why did he say that? Why he's sitting on cash? Why doesn't he buy ETF himself till he buys a?
Yeah,
In
that's
fact, you should ask, if you by chance meet him, you ask him.
But you know, the bet that he
note it down.
placed,
You must
the
ask
bet
him.
that he placed, I studied that whole thing, you know, when the 10 years got over and everything, I studied all of that about it. It had huge number of hedge funds which are fund of funds. So just think of it, you're buying a battery of funds.
Yeah.
Those funds are funds of funds.
Yeah.
And the underlying funds are again owning stocks and futures and hedges and all those kinds of things. So I'm sorry, but I don't know how was it actually supposed to outperform, because even in India, if you buy some 20 different mutual funds which is owning 50 different stocks, I mean, it's cliched, but you never beat the market by buying the market.
No, so, you know, just the example that you gave about 2017, where index funds, you know, are at an index level, at the headline index level, did outperform individual funds. Okay, make that point and I'll continue.
Yeah,
on
sorry.
that.
So there's a lot of debate in India also.